Hello and welcome to Connect, the weekly podcast for the California MBA, featuring one-on-one interviews with movers and shakers in the mortgage industry. I'm Susan Milazzo, CEO of the California MBA. I'm very happy that you could join us today. Before I get to today's guests, I'd like to thank our 2023 President's Council sponsors. Now, these are companies that have given a tremendous amount of financial support to the California MBA so that we can continue to be strong voices for the real estate finance industry before the California State Legislature and our regulators. Advocacy is the cornerstone of what we do. Our support from President's Council sponsors allows us to stay strong. So I want to thank those President's Council sponsors. That's AmeriHome, Arch MI, Consolidated Analytics, Incelerate, Funding Shield, Guild Mortgage, Rocket Mortgage, and Western Alliance Bank. Thank you all so much for your support in 2023. And with that, I'd like to turn to today's guest. I am welcoming Vince Furey, Senior Vice President of Mortgage at MeridianLink. Vince, welcome.
Thank you, Susan. It's great to be here.
I always like to get started with a little background and telling people how you got started. So how did you get started in the mortgage business?
Yeah, I think like many people, I kind of fell into it, wasn't looking for it, and it found me, I guess. After college, I went through the commercial credit training program at Mellon Bank in Philadelphia. And once you get through that program, the bank places you where they have need, and I was placed in mortgage and never left. So throughout the years, I pretty much have worn every single hat and worn every hat and shoe. Started out in origination, ultimately ran real estate lending for Mellon Bank, then shifted to wholesale and correspondent lending at Bank One, and then shifted to the IMB world with Pinnacle, which ultimately moved me from the Northeast down to Florida, and now completely shifted into the vendor space for the last 12 and a half or so years with OpenClose. So it's kind of the similar path that you see out there, where once you get in, you kind of never get out.
Yeah, you've had a lot of different roles in the mortgage industry, I think, which makes everybody very, very well-rounded. I love stories about great entrepreneurs such as yourself, and I see you were self-employed at one point. What advice would you give to a young entrepreneur?
So I think generally with mortgage banking, I think successful mortgage bankers are, for all intents and purposes, entrepreneurs. I mean, this is one of those industries that, very rarely see successful people leave the industry, and you have pretty much 100% control over, your individual success or failure. And I think that's one thing that's really exciting about our industry, because it is full of that entrepreneurial spirit in every area of the industry. From a perspective of advice, I would say it's important to remain fluid and listen. What you set out to do isn't ultimately what will bring you success, I guess. I started a company that initially the business model was to provide balance sheet acquisition services to small community banks and credit unions. And ultimately it became an asset disposition company. It was one of those scenarios, and you hear this a lot talking to different entrepreneurs out there, where we're pitching our service to a prospect, and they say, that's not something we really need help with. What we really need help with is this. Can you help us with this? And the answer was yes. Did we know how we were going to do it and how we were going to fulfill it? Not necessarily, but we figured we'd figure it out. And you have to be willing to make those shifts when the opportunity presents themselves on the spot. It happened at OpenClose. I mean, OpenClose started out as an ASP hosting company and ultimately developed into one of the leading mortgage fintech companies in the industry. And listening, being fluid, and being ready to shift when the opportunity presents itself.
Yeah, that's great advice, especially in this, probably many industries, but especially in the mortgage industry. Know how to pivot and get the job done. 2023, Very challenging year for lenders, and probably more so than we've had in quite some time. How can automation done correctly help reduce costs and create that improved customer experience that lenders are all looking for?
Yeah, it's a it's a super loaded question. You probably ask 5-10 people that question and get 5-10 different answers. We're in a difficult time right now where the chips are really stacked against us. We're dealing with increasing origination cost, margin compression, rising interest rate environment, low home sales inventory. There's probably even a few more you could throw in there. And I think it can be relatively simple to look at areas of a back-end operations that might not have the best efficiency in the workflow and add some automation to gain some efficiency there. I think the challenge is the vast majority of the cost in our business resides in the acquisition of the loan in the first place. And what do you do to really impact that? Let's face it, if we were in an industry that you could have consistent forecastable volume, it would cure a lot of woes, but we never have, and it never seems we have that luxury in our industry. So I think, and you said it in the key into the question, I think it's really important to focus on the consumer experience. What technology are you deploying to make the consumer experience easier, faster, more collaborative? What automation are you placing into your consumer experience? Are you taking advantage of the automated verification services? Actionable transaction-driven workflow, where workflow is driven by borrower, loan, credit, AUS, verification service attributes. What services can you present directly to your consumer and allow them to transact without necessarily having a lender engaged in that process? How can your referral partners get connected to the transaction? Obviously, the successful originators out there today have a vast network of referral partners. And how are you making the transaction for their customers seamless and collaborative so that they're going to bring you more loan opportunities? I think really it starts with really affecting that consumer experience. If you do all those things, you'll gain a ton of efficiency on the back end as well, but you'll also have an opportunity to lower that acquisition cost, where really the big piece of the cost resides.
Yeah, huge. Gosh, the cost to originate's huge issue this year for lenders. I'm shocked when I see those statistics on how much it costs these days.
No doubt.
How does OpenClose, now MeridianLink, set yourself apart from competitors?
So that's actually a really exciting topic, especially now in the evolution of our company. I think most people know that OpenClose was acquired by MeridianLink late last year. And one of the primary synergies between the two companies is the vision of providing a game-changing borrower experience for our lender customers. If anyone's paying attention to MeridianLink and their message and our messaging in the marketplace, it all surrounds what we call the MeridianLink One vision, and that's really having a fully interconnected digital ecosystem. Many may not know that MeridianLink is the largest consumer LOS provider in the country, with roughly 1,700 or so FIs running their consumer loan, our consumer LOS platform. And as an institution, the vision is to have a fully interconnected ecosystem with a common consumer front end. So regardless of the type of transaction that the consumer is engaging, whether they're opening a new account, getting a car loan, a mortgage, a home equity loan, that the user experience is common, and then the back-end systems to fulfill that transaction are interconnected. So it's a really exciting time here at MeridianLink. Everything from a product vision perspective here is looking forward, 3, 5, 7, 10 years out, for how are we going to serve the future consumer population, the millennials, the Gen Zers, what cutting edge technology are we going to develop to meet those future borrowers where they want to transact. I mean, we're looking at a population that grew up, communicating almost entirely via the mobile device that's connected, to their hand and in their pocket at all times.
True.
And how are we going to serve that population? Because that's our future borrowing population. That's the population that we're going to have to meet them where they want to transact. We have a term here we call lender-less lending, not lenderless, lender-less lending. And that is the concept of providing a borrower experience that is self-service to the extent that a borrower can come into the point of sale, they can apply for a loan, the system can automatically run credit, AUS, run first-party data sources for first-party verification data sources, drive workflow based on loan, borrower, credit, AUS attributes, automatically provide the borrower pre-approval. So essentially a realtor in the realtor portal can invite a borrower to apply for a loan. So let's say realtor has a buyer, they're ready to make an offer on a house. Normal scenario is, hey, Johnny's my loan officer. He's going to do a great job. Here's his business card that they probably don't have. Now they're searching for contact information. In this case, they can just go into our portal, enter their buyer's contact information. It'll automatically send the buyer an invitation to apply from the loan officer with the realtor already associated to the transaction. The borrower can go through the application process, walk away with a pre-approval letter without the loan officer even having to engage the borrower at that point. That's kind of the transaction model that we're and the transaction path that we're driving to serve that future population.
That's very exciting. You guys have an incredible product.
Thank you.
MeridianLink is a big supporter of the California MBA, for which we, of course, are very grateful. Can you share with our listeners why you feel it's important to support the California MBA?
Absolutely. So, we certainly don't corner the market on great ideas. We have a lot of really smart people at MeridianLink that have a lot of great ideas and execute on those ideas. But we also facilitate a lot of collaboration between our customers with each other and our customers with us. And a big segment of things, our innovation plan and ideas that that track to roadmap and ultimate production release are driven from that population. But there's a whole nother population out there that maybe doesn't have the context of operating our system, but can be a great area of collaboration, incubation of ideas. And we really see the California MBA as being another thread in that network of collaboration of professionals that are, kind of experts on the street to help us incubate ideas into production. So, we see it immensely valuable. I know, Tom Rice participates in your technology board. And it's just a really great opportunity for us to broaden that contact network of people that are in the industry working every single day to collaborate and drive more ideas on, what's the direction we need to take the product to best serve our lender partners.
Wonderful. Well, thank you very much for your support. We really do appreciate it.
You're very welcome. It's been a great collaboration for sure.
And Vince, thank you for being a guest on Connect. Great to have a conversation with you, and hopefully we'll see you at some of our events over the summer.
Absolutely. Looking forward to Dana Point this summer.
And thanks to all of you for joining us on Connect. To access any of our past episodes, you can follow us on our YouTube channel. We're also available on SoundCloud, Apple Podcast, and Spotify. That's it for this week, and we'll see you next time on Connect.